Hello and welcome back. In this lesson, as I said in the previous lesson, we'll look at the comprehensive example of capital allowances. Right? Now could you please download your lecture notes and look at your lecture notes, as I am going to attempt the question on the screen, on the board, so I won't be sharing the screen with you. Alright? So please download the lecture notes and come to page 34 of your notes, please. Page 34. So the comprehensive example is starting on page 34 and it will continue going on page 35. Now as you can see on the screen, on the board, that I have divided I've made the different columns. So first one is first year allowance, I told you in the previous lesson as well. Then it says annual investment allowance, main pool, special rate pool, laptop for private use, and then car for private use as well. Then in the end it says the capital allowance, so here we will put the all capital allowance, the whole amount of capital allowance will go into the final section. Right? Now I assume you've downloaded the lecture notes. Let's read from the lecture notes, please. It says James is a sole trader. The balance as at 30th June 2014 for capital allowances purposes were given as follows. Now this is the balance of at the year end, so he has already given it us. So this will be our writing down now. So this will be our opening balances, you can say, right? So the main pool, it says £20,000, special rate pool £40,000, a laptop used by James, it is 10% private use, that is £2,400. This says car with the private use by James is 20%, 20% private use of £8,000. So by looking at this year-end figures, that's why I made these private used columns. So laptop 10% private use and the car 20% private use. That's why I've already made these, because I knew these are going to come in the question. Right? Excuse me. After that, on the next page, it says during the tax year 31st December 2014, James made the following acquisition. Now if you could check the date here, please. It says 31st December 2014. Now previous year end was 30th June 2014. This is 31st December 2014. It is the same year. So it means the figures given below are only for 6 months. Alright? So you remember from your notes that if the dates are if the accounting date is less than 12 months or more than 12 months, then we will have to proportionate, we will have to do the pro rata basis. So we'll either make it short or or we will increase the percentage. Like in main rate pool, so the official rate is 18%. So in this case, if it is less than 12 months, so in this case it is 6 months, so we will take 18% multiplied by 6 over 12, which will be 9%. Alright? So likewise we will do for others as well. Anyway, let's start the question then. First of all, let's start with the opening balances, please. Now, opening balances, it says, you can write it down as here, tax written down value. Tax written down balance or value, you can write it down as. So, tax written down value. So, how much is it? Main pool is £20,000. So, I will go into the main pool and I will put £20,000 under this one. Then it says a special rate pool is £40,000. So special rate pool here and £40,000 in this one as well. After that it says laptop private use £2,400. So £2,400. So it will go straight in this one. Alright? And then it says car with private use of 20%. So which is £8,000. So I'll put £8,000 in this one as well. So that is the car which is a 20% private use by the owner, because James is the owner. Alright? So that is our opening balance, tax written down value written here. Alright? Then it says we'll have to read the transactions. So he made some acquisitions and he made some disposals as well. So first he gives you the details of the acquisitions on page 35. Excuse me. So on 15th of September 2014, he bought a car with 70 grams per kilometer CO2 emission is 75 grams per kilometer for the salesman, and of which 10% private use. So salesman is using 10% for private use. So if the salesman is using 10% for private use, so what does it mean? Salesman is not the owner; he's just an employee. So we will just ignore this one. So because it is personal use of the salesman. All right. So let's see the car. So it is 70 grams per kilometer. Right. Now please check on your notes. If you go back to the notes, and 70 grams. Now where does this come? 75 grams or less than that. Now if you check on page 24, these are 75 grams or less than that will go into the first year allowance. So you will get 100% first year allowance. All right. So this is a car with 70 gram per kilometer emissions. So we will write it down in here. We can put the date. What is the date here? 15/9/2014. So we'll write it down 15/9/2014. So it is a car 70 grams per kilometer. All right. So 70 grams per kilometer, and we will put it under first year allowance. And how much it is? £20,000. So it will go into this one, £20,000. All right. So this is the car with private use. That's why we put it under the first year allowance. We get the first year allowance of £20,000. It says in our notes, right? And that is our 100%. So 100% will go into the first year allowance. Then it says on 20th of the 10th 2014, car with 150 grams for business use. So this is the car of 150 grams. Now please go back and check on your notes. When it is over 130 grams, then it is added into the special rate pool, right? So let's go ahead and then put it in the special rate pool. So what does it say then? A car with 150 grams for business use. So 20th of the 10th, 2014, a car 150 grams per kilometer. That is £10,000, and it will go into the special rate pool. So that £10,000 it will go in here. All right. So £10,000 is with special rate pool. That's why it will go in this one. Now special rate pool will only apply 8%. You remember, whereas in the main pool we will apply 18%. Let's move forward then. Car with 120 grams for business use. Now the 120 gram will go into the main pool. So we will add it into the main pool. Now before we add it into the main pool, that is a car. Now can anything else go into the main pool? Let's see. Van. Where will the van go? Van will go into the main pool as well. Then it says general plant. It will also go into the main pool. So van will go into the main pool. General plant will go into the main pool. Lift for office building. There says solar panels. Now what are these? These are integral features, if you remember. Now integral features will go into the annual investment allowance. If you check on your notes, so you will get £500,000 of annual investment allowance. All right. Then it says computer, £12,000. It will also go into the main pool. Right. So let's put the additions into the main pool then. We can write it down as additions in main pool. Additions in main pool, and we can just put the heading. And what is it? So it will be van. How much it is? Van is of £100,000. So £100,000 for van. Then it says general plant. General plant. How much it is? It is of £200,000. And after that it says computer. So computer will also go into the main pool. So we will put that one as well. And how much it is? It is just worth £12,000. So this will also go. So how much altogether? £312,000 will go to the main pool. So we can write it down as altogether £312,000. So 3112 will go into the main pool. Alright. So we've added all together. Instead of putting each and every bit separately, you can do that as well. But it looks a little easier and professional if you put all of them together. It it make the presentation look more good. Alright, then move back. We have left something. What did we left? What did we leave? We left the car with the 120 grams per kilometer, and that is of 9,000 pounds. So that will go into the main pool as well, right? So car which will go into the main pool is this one. So let's go ahead and then put the car with 120 grams per kilometer will go into the main pool. And how much it is? Its value is 9,000 pounds. So that 9,000 pound will also go into the main pool, right? So that 9,000 pound will also go into the main pool. Another thing we left was integral features. So integral features we will get annual investment allowance of 100,000 pounds. So we will write it down as annual investment allowance, AIA. So AIA, what are these? So first is lifts. If we write down as lifts, so how much are these? Lifts are for 250,000 pounds. So 250,000 pounds for the lifts. Then it says solar panels. I just write it down as S panels. So 150,000 pounds for that. So how much altogether? Altogether 400,000 pounds. All right. Then it says annual. Then we will write it down as annual investment allowance. How much is it allowed? If you remember, 500,000 pounds was our allowed, but we only operated for 12 months. 6 months out of 12. So we will only get annual investment allowance for the 6 months. It says in the question. So our accounting date is only for 6 months. So we will do the 6 months one. So how much it would be? It would be 250,000 pounds. So that way, so we will deduct some whatever the difference is. It is 150,000 pounds, I think. Now please come to your notes and go to annual investment allowance. Now annual investment allowance is on page 33, please. It says 500,000 pounds multiplied by months over 12 if it is less than or more than 12 months. Then after that it says after calculating annual investment allowance, writing down allowance will also be given. So whatever the difference is, 150,000 pounds, we will put this one into the main pool, and writing down allowance will be given on this one. Right? That's why we did that. Excuse me. Now another thing. Now if you come back to the question, please, where it is, page number 35, please. Now have we done each and every bit? We did 70 grams car, we already done that. Then 150 gram, we did that. Cars with 120, yeah. Van, general plant, lifts, yep. Excuse me, and computer. The only thing left is the disposal just beneath that. So we will write down the disposals as well. So if I write down the disposal wherever you want, but I will make the space here. So disposal, I will write down as disposal of what? Disposal of a car, and what is the 110 grams? 20% private use. All right, 20% private use, 110 grams. That one is up there. So how much he has disposed it for? He has disposed it for 12,000 pounds. So here you go. If we come here, so that is 12,000 pounds. It will be deducted out of this one. All right. Now if you check here, the value of this car was 8,000 pounds, whereas he sold it for 12,000 pounds. So what is it? It is a balancing charge, because he has sold more than what its value was, so he made some profit, although it will be coming into negative. But please remember, this is capital allowance. So capital allowance is already a minus, it will be deduction. So when it will come into minus, so we will deduct it out of the capital allowances. So when we will deduct it out of the capital allowances will be reduced. When capital allowances will be reduced, our profit will be increased and we will pay more tax. So because of this sales of 12,000 pounds, although it will be showing into the negative, but this negative will eventually increase our profits. Alright? So that was it. Why? So we've already done each and every bit. Now if we come to calculate the capital allowances, So let's try and start them. So if you talk about the cars here, so first of all, if we talk about this one, how much is total in this one? So we will make total of this £20,000, 170, and then it's 300, 470, 480, 490, 492. So if it is 492, assuming if it is 492, I will actually, please make sure you do the calculations. I will just put it as 18%. So whatever the total is, you will take 18% of that. So sorry, not 18%, because it is for 6/12. So 6/12 times 18% multiplied by whatever the figure is here. So that will be our capital allowance as far as main pool is concerned. All right. Now, first year allowance, as you know, all of the first year allowance will go into this one because it is 100%. So it will be 100% first year allowance. So that's why we will take it straight here. So £20,000, and that is 100% of that. All right. Balance of that, it is balance of £4,000. This will be deducted out of the capital allowances, so it will reduce the capital allowance. This is the balancing charge. If you want to write down, that's it. That is balancing charge. All right. Then what we left is, excuse me, this one £400,000. This one our annual investment allowance. However, we were only eligible for £250,000. Now this £250,000 is our annual investment allowance. This will go into the capital allowances as well. So we'll put £250,000. That is our annual investment allowance. All right, that is part of our capital allowances as well. So we done that one as well. We did that. If we talk about the main pool here, whatever the figure is here, we will put this one here as well. All right. So that will be our main pool. If we talk about the special rate pool, and our special rate pool has got 8% on that. All right. So if special rate pool has got 8%, so we'll total that and we will take the 8% of that. All right. So 8% into 6/12, because it will also be for 6 months. So whatever the total is, we will take 4% of this one as well. All right. So we'll take the 4%. Excuse me. So that was our capital allowances. Now please come to, we've still left some things. If you please come to your notes, if you please come to your notes where it says main pool. If you come to your main pool on page, sorry. No, sorry, it's all right. Yeah, that's fine. So that is our total figure of capital allowances, and so whatever we're taking out of that, it will always go into the capital allowances. So this one as well, which is our first year allowance, and then annual investment allowance will also go here. It is. Then the main pool will also come here, and the special rate pool. So 8% multiplied by 6/12, because the accounting period is less than 12 months. So we'll take 4% of that as well, and it will also go into this one, right? As far as this one car is concerned, we will take the deduct this one out of this. Why we did that? Because we have sold it for more than profit. So we have sold it for more than what its cost was. So that's why it's balancing charge. Now, only thing left here is this 20% personal use. All right. So when it is 20% is personal use, all right. So although I have written 4,000 here, but eventual capital allowance will only be 80%, because 20% is personal use. So I will take 80% of that. That will be my eventual capital allowance instead of £4,000. Now the reason I showed you here, just to make it easier for you. Now, because 20% is for private use, that's why we will only take the business proportion. Now, this personal use is for used by the owner. So whenever there is a use by the there is personal use by the owner, then we will only take the business proportion. We will not take the other portion, which is a private portion. We will not use the private use. We will not take that. We'll only take the business use. All right. Now this one here, laptop, which is a private use, £2,400. This will only take 90%. So £2,400 and multiplied by 18% into 6 over 12. So whatever it is, we will only take 90% of that. Why 90%? Because 10% is the private use. So when there is a private use, we only take the business use. So we will only take the business use, and the business use, only 90% of this will go into the capital allowances. So 100% will not go, only the 90% will go into the capital allowances. Alright? So that is it, I think. We have almost covered each and everything here. Yeah, I think we've covered each and every bit. Please make sure, while you pause this video, please make sure you do that. You try to copy this one and make the total of capital allowances. Now the total figure of capital allowances will go, and it will be deducted out of the trading profits. All right. So it will go into the trading profit, and it will reduce the trading profit. So when it will reduce the trading profit, we will pay less tax. All right. So that was our capital allowances. All right. So that's it for this lecture, and I will see you in the next lecture with the trading losses, which is our next topic. So what is trading losses? Trading losses is simply when you are operating your business for years and years, right? So you might make profit, but you could also incur loss. And when you incur some loss, it does not mean it is end of the world. It is not end of the world. So you will continue operating. So when you will continue operating with the hope of making it to profit, so although you incurred a loss last year, so when you make the profit, you pay tax. But when you make the loss, that loss can be set off against the profit to reduce the profit to pay less tax. All right. Say for example, in this year, if I make the loss of £4,000, and in the next year, if I make the profit of £5,000, now this 4,000 will be deducted out of the £5,000 next year, so that my next year taxable profit will be reduced, so I will pay less tax. So that is our trading profit. You might well know from your other studies. So how to set off the losses, we will look at them losses in the next lecture. Thank you and goodbye.